Hi there, welcome to Kneppy Invest and welcome to February 27, 2025. Only one video today, and that is the ASX Daily Rundown video. And the whole reason behind that is, as I was taking the dogs for a walk this morning, I got a text from work asking if I can do an emergency shift because someone called in sick at the last minute. And me being the one who likes to help out said, I can do it if no one else wants it. And no one else wanted it. So I am working today, working from home, earning over $1,000. That's what you do when you get called in to do emergency shift. It's really interesting that there are people out there who don't understand that weather is continuous. Weather is 24/7. In fact, some people who work at the Bureau of Meteorology don't understand that. Yes, I've talked to some managers who didn't realize we were 24/7 organization. And that's one of the reasons we take care of tsunamis, because tsunamis could happen at any moment, even though tsunami is not really related to meteorology. Anyway, so that's the main reason I'm only doing one video today. The company that would have been stock of the day, Stealth Group, I'll do a standalone video on that company over the next few days. I might release that video on Saturday. I'm thinking of taking Saturday off in terms of videos. So I do or will record that before Saturday for release on Saturday, because I really wanted to talk about Stealth Group today because they released another really interesting announcement. And what I might do, no, I won't talk about Stealth Group. I'll wait for that sound video. Now, I do have a top 5 stocks of the day, and I'll talk about those top 5 after we have a look at the ASX today. The 4, apart from Stealth Group, easy selection there. These companies are called Wiseway Group, Eagles Automotive, Camplify, Australian Ethical Fund. And because I'll do a standalone video on Stealth Group, I'll take that out of the top 5 and I'll put in another company, and I have no idea what this other company is going to be. I could talk about Nvidia because they did release their results before we started trading. But there are a lot of options, but those 4 companies I mentioned are safe in the top 5. Okay, so I'll talk about the ASX today. We'll have a quick look at the earnings calendar, I suppose, and then I might answer some of your questions and reply to some of your comments. Quickly going through a trading view earnings calendar. Now, when it comes to earnings calendar, even though I do like they do have estimates here, I don't know if these are reliable. Coles released their results today. I give Coles results 2 thumbs up. Qantas, meh. Medibank, 1 thumbs up. Ramsay Healthcare, In fact, quite a few of these companies' share prices are up. I didn't see Harvey Norman release. IDP Education down. Eagles Automotive up about 20%. Talk about that company. Mesoblast, I could include Mesoblast in top 5. They did release something interesting, but I don't think the share price is high enough for it to be worthy. I'm still waiting for Supply Network. Objective down, Dicker Data up. And tomorrow, which is the last day of February, isn't it? We should get the last of all the results, including TPG, Endeavour, Pexa Group, Star Entertainment Group, Kina Securities, Fleetwood Limited, Noble Oak, which is interesting because it's a recent listing, and I just want to see how the company is performing, some sort of insurance or something like that. And Frontier Digital Ventures. There you go. Not as many tomorrow, but I'm sure a lot of small companies will release their results. Okay, so let's have a look at the ASX today. It's up. We're in the green. Finally, a pretty good day. And when I say pretty good day, I'm talking about relative to what we've been experiencing in the last 2 weeks. A green day is or has been quite rare. Now, in saying that, tech's had another bad day. Resources is a pretty good day, and small caps has also had a pretty good day. If we have a look at what's happened during the day, a bit of a sell-off in tech, particularly from about midday. It was moving alongside XAO and XGO through most of the day. I'm not sure what's seen the sell-off. Now, I should also mention, I haven't seen any results after about 2 p.m. I quickly went through all the results released. Actually, to be honest with you, I quickly went through all the results today because I'm working, so I don't have much time. So I might have missed 1 or 2. I'll be honest with you, I might have missed 1 or 2 out of the 60, 70 that were released today. And when I go through results, I just open it up, have a look, and I decide fairly quickly whether I like it or not. And that decision can be significantly wrong. I'll probably say I'm right 60% of the time and I'm wrong 40%. Sometimes I'm quite surprised when I see the share price up or down by a significant amount. Anyway, in fact, that happened today with a few companies. I thought that was pretty good. Then I saw the share price down. I was like, what did I miss? And I'll figure that out when I have a look or closer look at the results. And there's also a chance the market is wrong and it's overreacting. There is that chance, yes. And sectors, staples had a pretty good day. I'm assuming that's because of Coles. Coles was up about 4% last time I looked. So let me just confirm that. In fact, I did have a close look at, not close, but a closer look at Coles results. And I thought it was actually pretty good. Yeah, up 3.15%. A2 milk up 2.64%. So pretty good day for staples. Even Woolworths up 0.59%. And what else had a good day today? Materials, industrials, telecommunications, and energy all up by more than 0.7%. Well, healthcare and IT down by over 1%. What has led healthcare down? Let's have a look. See, it's not Ramsay Healthcare because they are up. Let's have a look by market cap. CSL or Pro Medicus. Interesting. So no real massive drivers here. There's Ramsay Healthcare up 9.36%. I think it's just general weakness in the market or in this particular sector. Anyway, so gold's had a good day, and ASX 20 up slightly. So let's have a look at the ASX 20. I'm assuming maybe the banks, some of them up, some of them down. And iron ore is the other big one in the ASX 20. So let's have a look. Yeah, CBA is down, Westpac's up, NAB down, ANZ up, and CSL's down, BHP's up. So 14 up, 6 down. But I would say if you look at by market cap, some of the bigger companies, 3 of the bigger 5 companies on the ASX are down by more than 0.5%. Okay, let's move on to the top gainers today. And what I'm going to do, there's Wiseway Group, and that's the reason why it's in the top 5 stocks. They released their results last night. I had a look for this logistics transport company, something like that. I had a look and went, not bad for a company with a markup of about $25 million. Anyway, Bioxyne rebounded. Remember yesterday, Bioxyne was down, was it 22%? Now it's up 25.93%. Yeah, it's just silly if people are just reacting because of that. And this is the reason why I've decided not to trade these type of companies. And because I do like where Bioxyne sits right now financially. It's more of a longer term, hopefully a medium to longer term hold. And you can see the chart, share price has dipped and the bottom may have been reached just because of the reaction today. Hopefully there's been bigger volume, not quite. I would like to see a little bit bigger volume coming in for Bioxyne. And let's go back. Where are we? Here we go. And there's Eagers Automotive. Share price up 20.8%. Little bit surprised based off what we saw from Peter Warren and what was the other one? Autosports. They were quite negative. Eagers Automotive is a complete opposite. Now, the numbers were down from last year, but their sort of outlook was quite positive. I'd like to have a closer look at that one. And this really showcases or maybe emphasizes that charting or technical analysis is important because when Peter Warren, actually, I'll talk about this when we get to talking about Eagers Automotive. Why not? Why am I talking about it now? Australian Ethical Investment up 20%. Another one in my top 5. So when the share price of a company is up over 20%, I have to feature it in the top 5. What else do we have here? That's about it. Clearview Wealth up 14%, releasing results. Stealth Group, I'll talk about Stealth Group in a standard video, but Stealth Group, I suppose this is sort of like a preview. They were up 16.7% the other day on release of their results. And today they made an announcement in regards to a distribution agreement. And based off what I read fairly quickly, this should lead to an upgrade. Or in a way, it is an upgrade because they did mention that the revenue, if they meet expectations, the revenue should be up a fair bit from what they're forecasting in 2028, which is one of the reasons I bought this company. Anyway, so SGI, and if you have a look at the SGI chart, it's a spectacular chart. And this is another one where I've been thinking of selling and just don't know. At this point, a beautiful looking chart for Stealth Group. I'm just going to stick with it for now, but it is one I'm trading. And maybe it's one I should not be trading. I should have it for the longer term. But share price, or the share price has increased from when I bought 15.5. So it's almost a 5-bagger. Yeah, it's almost a 5-bagger for me. And that was a beautiful time trade. I'm going to have to give myself credit for this one. It was a little bit weak halfway through 2024, but it's really taken off since September last year, so 6 months ago. That was the time to buy. What else do we have here? Acrow did release results, but small company. Aries Resources released results as well. So I could talk a lot about these companies, but I'm strapped for time. Medibank, up 9.58%. Let's briefly talk about Medibank. I'm assuming that their results were better than expected and they probably had a pretty good outlook. And I'm making a lot of assumptions here. I'm just going to focus on the chart for Medibank because this one is a breakout. So beautiful run up in share price today. Share price at an all-time high, I think. Pretty good volume, I'm assuming. Yeah, okay, volume. My only question about Medibank and any insurance is just the valuation of these companies. So this is definitely a possible play, but Medibank is not the sort of company I like to trade in these sort of situations just because I don't see significant growth in the future because, and the reason I'm looking for significant growth because I want a little bit of leeway. And I wouldn't be surprised to see share price of Medibank not rise much from here because the growth prospects are not that strong for this company, if that makes sense. Just behind Medibank, we have Ramsay Healthcare. Share price has been challenging. Thank you, Challenger, for providing me that word. Share price of Ramsay Health has been challenging over the past few years. I did try to trade it, and they did release their results. Again, I'm not sure exactly why the share price is up. Haven't had a close look, but here is the problem when the share price has been in a downtrend for a while. When a company might release something positive, you're going to have a lot of selling pressure because all those shareholders have bought at high prices see the time to get out, see an opportunity to get out. And that's why the share price of Ramsay Healthcare has dropped during the day. Now, it hasn't dropped from yesterday, but has dropped during the day. In fact, the high in this company's share price was $39.50. Now it's $36.69. So it's dropped almost 10% from the high. And that, again, is a problem of this sort of chart. So the best time to release really good news is when the share price is either going sideways or is rising because you don't have as much resistance. So that is one of the reasons why I always look for the share price reaching at least a 3-month high. I do prefer a 6-month high. I used to wait for a 1-year high, but I do believe there is significant resistance if the share price isn't at least a 3-year high. And we're definitely seeing that with Ramsay Healthcare just today. Good volume coming through, and maybe the results were better than expected, or maybe the outlook was quite good as well. I don't know, but it's just based off the chart, not for me. Challenger, nice little rebound. In fact, let's have a look at the Challenger chart because share price was at multi-year lows, I think, and it has bounced off 550 really strongly. Bit of oscillation around 550, and the reason 550 was at that level, yeah, it was a 4-year low for Challenger. Just based off this chart, the weekly chart, it's been trading in a range for about 4 years, and it's at the bottom of the range. There you go. And what else do we have here? Neuren Pharmaceuticals. Yeah, let's talk about Neuren. Up 8.82%. This company did receive some Daybue sales from Acadia this morning, and I have a feeling these numbers were a little bit better. Have not looked at this yet. So net sales are 348 million. I'm wondering if they did also provide some guidance for next year. Let me have a look. I suppose I have a little bit of time here. And they also should mention how, so then Neuren is not receiving that much. That is the net sales of Daybue. They get a royalty on this amount. It should be a high royalty, I'll say 15% or so. And they should hopefully mention how much they're getting. Here it is, anticipated royalties, 56.2 million. Yeah, that's a little bit more than I was thinking. And do they... Oh, they must have some sort of guidance for 2025. Yes. Oh, and also the reason the share price is up, the sales was towards the top of its previous guidance range of 340 to 350. So technically it's not a beat of guidance of expectations, but because it's towards the top of the expectation range, that will lead the share price to rally, because if you put your numbers in the machine, you now have a certain number and your range of possibilities is now going to be skewed towards a higher end, if that makes sense. And I'm trying to find the guidance. Yeah, here it is. Guidance, revenues or sales between 380 and 405 million. That's interesting. Oh, the other interesting thing here is 70% of the diagnosed Rett patients yet to try Daybue. And I'm assuming that's just in the United States because they're only selling mostly in the United States. They do mention Canada here. First anticipated sales in the third quarter. So I think this is a pretty good result for Daybue and Neuren, and that's why the share price is up 8.32%. Now, previously, when Neuren did release some good news, the share price, actually, this was Clinival. I'm thinking of Clinival. But I'm thinking share price of Neuren has fallen a fair bit, and maybe the share price is trying to find a little bit of a base. There was a false break back on the 15th of January. I remember that day thinking, oh, this is looking negative. Share price recovered almost immediately after that. So that was a false break. And I wouldn't be surprised to see Neuren Pharmaceutical share price move into an uptrend within the next month or so. Okay, what else do we have here? Digger Data released results, up 6.8. What else? McMillan Shakespeare, up 12.1%. I wasn't that interested in this result. The chart also looks, and the reason behind that, the share price did fall a fair bit not that long ago. So I'm not that keen in this chart, even though the share price is up a fair bit today. Well, I need to see the share price remain at these elevated levels over the next few days. I don't want to see it dropping back into this pile. So we need to see the share price get above $16 for me to be interested in McMillan Shakespeare. And I probably want to watch or look at their results as well. And what else? That's it. Step One Clothing had a nice little rebound. Okay, let's turn our attention to the top losers. And funny enough, what I did is I went through the results and then I put into two columns, positive and negative. I did put in the positive column 1, 2, 3, 4, 5, 10, 13 companies. In the negative column, I only put 8. So today was more positive than negative. Yeah, today was more positive than negative. So I'll just mention all the companies I put into the positive section. Wiseway, talk about that. Motorcycle Holding. Yeah, the share price of this, in fact, they released the results last night. I am trading this one, so this was of interest to me. Share price up 10%. The results were actually pretty good. Coles, Before Pay, City Chic, Medibank, McMillan Shakespeare, Eagers Automotive, Ramsay Healthcare, Australian Ethical, Clearview, Dicker Data, and Karoon Energy. Quite a few other results were good, but this is like my positive and negative columns that might be in the top 5 stocks. So there's quite a few other good results that I did like, but they're not in these particular columns. For instance, what's one? Like Austin Engineering, I thought was weak. Share price was down, but that was not in my negative column. For instance, negative column, we have Acrow, Frameworks, whatever it's called. Oh, Austin Engineering is in there. Camplify, IDP Education, Comms Group, Saunders, Objective, and Moneyme. So, for instance, what is one I thought was okay? I don't know. I can't think of any now. Anyway, so let's have a look at top losers. And Camplify down 31.37%. And the reason why this company is in my top 5 is because the share price has dropped a lot. Now, Comms Group is down 27.5%. That is not in my top 5. I'll just have a look at the chart. I had a very quick look at those results, and I thought they were slightly negative, maybe not that much negative. But the share, let's have a look at the chart. And yeah, the chart, nothing. I'm not getting anything out of this. So I think we can move on. Look at the increase in volume, however, over the past year. It's been a nice increase in volume. That's what you want to see, but you don't want to see a big day of volume like we have seen today for Comms Group. What else? EVZ, I can't remember, but fairly low volume. In fact, we're seeing fairly low volume. Appen down again. I'm not shocked with that. I think I think the trend has changed. I think yesterday was a trend killer for Appen. It happened again. And yeah, that was a trend killer yesterday. I would not be trading this right now, even expecting a bounce. I do think there is a chance of a bounce, but I don't know. Then Saunders International, don't know much about this company. Had a quick look at the results. I thought it was negative, down 11.93%. Okay, let's have a look at top losers by market cap. Mercury New Zealand, pretty sure it did, but I didn't have a close look at that. IDP Education. I'll have a quick look at this chart. IEL, which is always confusing. And it just, my main thing about this one is I do understand there could be a turnaround in this company soon. And when I say soon, within the next 3 years, I just don't know when that's going to be. And I have a feeling I actually did pick this company for 2025. Yep, 2025. And that I probably wouldn't pick it if I had real money at play, at stake, not in stake, the trading platform, but in stake as in, not a stake as in, staking a vampire, but if I had money at stake, I probably wouldn't put my money into IDP Education just yet. I probably want to see some proof of a turnaround. We definitely haven't got that. Share price down on results, so it's not a good look. And the last time share price was this low for this company was, at the bottom of COVID-19. That's how far the share price of this company has dropped. That's astonishing. Objective Corporation, I am a shareholder of that company, and I found their results to be weaker than hoped for, and I'm not surprised the share price is down 8.5%. Now, fortunately, the share price has increased since I bought, but I think the uptrend maybe is coming to an end. Yeah, oh, nice bounce. At least we've seen a nice bounce today, but this also could be a trend killer for Objective. Integral Diagnostics, down big yesterday, but a nice bounce, but we've seen it drop again today. Who knows what's happening there? And Acrow down 8.33%. Not surprised. We released results yesterday, I believe, yes, and I thought they were quite weak. And that's interesting because I thought this was a good-looking chart, or had the potential of a good-looking chart. And again, this is a killer for me and Acrow. Yeah, that's just killed this potential. And what else? Finbar. When they release results, I sort of remember, but I don't know when. And Moneyme. Okay, Moneyme, this will be the last one I talk about here. Or EZZ, that's weird, down 10.5. There's just a lot of selling pressure on EZZ. I'm not sure why, but their results were pretty good. Anyway, Moneyme, this is probably one of the most interesting reactions from the market today. I thought it was a little bit weak, and I saw the share price down, but then we had the weirdest rally midway through the day. I think it was just someone who might have seen something positive, and they just went on a buying spree when it comes to Moneyme. Because if you have a look at the 1 minute chart, Moneyme at one point today was up, and that happened in a few minutes. Yeah, that's why the candlestick looks really, really weird. Share price is down as low as 14.5 cents. I think that was overdoing it. But if you have a look at, say, the 5 minute chart, you'll see, yeah, right here at 11:30, something might have happened at 11:30. There was massive buying. Share price went up 34.4% in that 5 minutes of trading. And it's actually dropped a little bit down. So I'm not sure what happened there, but share price up 34.4% in 5 minutes of trading. I think most of that was in a few minutes. And since then, the volume has just completely dried up. So interesting day for Moneyme. And yeah, that's what I'm going to say when it comes to that. Okay, let's turn our attention to the top 5 stocks of the day. So a lot that could have made it into top 5, and I have not decided on the 5th stock. I went through all that and have not decided. I was trying to find, why not talk about motor? I'm going to talk about motorcycle holdings. Yeah, why not? Why not? I'll put that at number 5. Motorcycle, I'm trading this, and they did release their results last night. 6:41 p.m. and I went, share price up almost 10%. So you can see it was a positive announcement. And because I'm trading it, I went, ooh, okay. I almost sold recently because the share price was dipping a bit, but we have seen a bit of a rally in the share price in the past few weeks. So that could be hinting that the market did expect some good results from this company. But And I just expected some weakness in this area. So maybe that's an argument to why I shouldn't be trading companies that are in a weak sector, or what I think might be in a weak sector. Anyway, so we'll have a look at this table here. And when I saw this table, it's not the table I was looking at. This is the table I was looking at. I was actually pleasantly surprised with what I saw. So a lot of nice increase in revenue. So I talked about 12% increase in revenue. We saw that operating gross profit up 10%. Inventory a little bit lower than last year. That's okay. Underlying EBITDA up 20%. Net profit after tax up 43% to 9.4 million. Return on sales increased 19%. And debt reduced by 36%. Interim dividend of 8 cents per share, fully franked. Last year, it was only 3 cents per share. And just a commentary was quite positive as well. So I thought, gee, this is, I mean, they mentioned strong half-year results, yeah. So I was actually thought this was pretty good. Thought this was pretty good. Anyway, so there it is, this table. Yep, I thought it was pretty good. I should have just kept on or stayed at this table. I'm not sure what I was doing there. Anyway, I thought these results were pretty good. And I fully expect the share price to be up. And the share price, of course, is up. So let's have a look at the chart. This is a trade. I bought on this little really nice day on the 27th of November. Share price really took off back in September of last year, so just after results in August. And we saw the share price dip back in January, fell all the way down to $1.65. And I thought, oh, it is dropping here, but I did expect a bit of a bounce. And then they released results today, and the share price today is at a long-term high. We're talking about share price at, well, 1 year high. Yeah, 1 year high. In fact, this time last year, the share price, it was in a really bad downtrend, or about to move into a really bad downtrend. In fact, they must have released their results on 28th of February last year. Share price on that day dropped 10.22%. So things have turned around pretty nicely for Motorcycle Holdings. MTO share price is at about $2, roughly $2. Anyway, so coming in at number 5, we have Motorcycle, a nice little usurper taking the place of Stealth Group, because I'm doing sound video on Stealth Group in the next few days. Coming in number 4, we have Australian Ethical Funds, or Australian Ethical Investment, share price up 22.68% on the back of some nice growth. Nice growth. I would assume that because the share price is up a fair bit, the growth was better than expected. That's what I'm going to say. And/or their outlook was quite positive. So the other thing I should also mention, I had a really quick look at the valuation of this company based off their underlying profit after tax and making some wild assumptions. And I don't think this is expensive anymore. I had a look at this company or this fund about 3 or 4 years ago, and I thought it was wildly over expensive. I didn't understand why people were buying it. I just thought it was crazy overvalued. And now I'm like, oh, I actually think there might be some value here. Maybe not after today, but definitely not as wildly overvalued as I once thought, particularly based off the growth this company is experiencing, and also just the thematic. So there's a lot of investors out there who just want to buy into ethical companies. They probably don't care whether a company is ethical or not. They just want to feel good and have the illusion of being good. So they just put their money into Australian ethical funds. My main concern about these sort of funds is how they define ethical, because I've actually heard a few ethical fund managers talk, and there was one that really scared me. And in fact, I would consider that fund, I can't remember who they were, to be highly immoral and unethical because of what they were doing, sort of blackmailing companies to do what they wanted, not for the benefit of the company, shareholders, just because it looked good. It's, what do you call it? The DEI, diversity, what's the other one? Gender, whatever. And I just heard that. I went, no, you can't do that. You can't blackmail companies to hire who you want to hire. It was all about hiring who the fund manager wanted to hire, not what was best for the company. I believe in diversity, but I don't believe in diversity in terms of sexes, races, and age. I believe in diversity of thought. That's the most important thing when it comes to the board of a company. It's a diversity of thought. So conservative, you want maybe someone who's more conservative, someone who's more of a risk taker, that sort of thing. And I've used the argument before that sometimes, now just imagine, you could have a 93-year-old white male racist, and you could have a 21 African woman from Nigeria, and you could say, look how diverse this board is. They both could be highly conservative, and that's not diversity. If they both think the same things in terms of taking less risks, that sort of thing, yeah, that's not diverse. Maybe they have this very similar backgrounds as well when it comes to education. Just because one's an old white male might be racist, the other one comes from Nigeria, doesn't mean they are diverse. So diversity to me is all about how they work together, how they think as a unit. Now, it's not about race, sex, and that sort of thing. That's not true diversity, in my opinion. Anyway, so I had a few concerns about that particular conversation when I heard it. It was on a podcast, by the way. And they were so happy to say it. Oh, we are blackmailing. They didn't use the word blackmailing, but they were literally blackmailing this management of a company to hire who they wanted to hire, not what was best for the company. Anyway, so I've always had mixed feelings about ethical funds. And the other thing is, I believe funds like this just put the word ethical in there because they know a lot of investors would just put their money into an ethical fund. So I'd love to know who they're investing in. But anyway, pretty good results and that's the other reason why I wouldn't be adverse to investing or putting my money into this, just because I know a lot of investors will just look at the name and think, I'm going to put my money into this fund. Anyway, so let's have a look at the chart for Australian Ethical. I have a hard time saying that. Share price of this company has been all over the place. Look at that. But I think we could safely say share price of Australian Ethical Investment has sort of broken out. I'm going to say that, broken out. A pretty good day for this company. Last time share price was this high was 2022. So you can see, I must have done the research in this company when I thought they were really overvalued back in 2021. It makes sense. Share price was as high as $15. So there is a lot of scope for growth in this particular fund, because if you get some positive sentiment behind the company, positive momentum, and the company the fund keeps on growing, you've got significant upside even after the share price has increased 21%. So this is definitely a potential trade. Australian Ethical Funds, ethical. I just want to say ethical. I think I keep saying ethical. Ethical. By the way, if you ever want to know what this sort of company is investing in, you can actually just have a look at their announcements. So Gentrack, Rubicon, I think, Australian Clinical Labs. So it looks like they're trading those companies. What else say? Kinatico, OFX Group, Somnomed, EPX. What's EPX? EPX. Oh, EP. They are investing in some really small companies. EP&T Global is a tiny company. And when I say tiny company, I'm talking about a markup of $10, $20 million, $27.56 million. Okay. Oh, share price up 31%. Oh, they must have released something today. Not just a bit of noise. Coming in at number 3, we have Camplify. Oh, this is an ugly one. And I've got to put in the right ticker code. This is the results. It's rallied. It was down by 30%, only down 22.88%. So interesting. Share price open at 76. So it looks like the major fall in the share price wasn't on open. It's been through the day. And that's surprising, because I did have a look at this and I was thinking, oh, it's weak. Not a surprise, because we have seen yesterday Hello World and Flight Centre released weak results. So there is a bit of weakness in travel right now. People maybe not wanting to travel as much. Maybe all their traveling is done. They were under-traveled at COVID-19, then they had to travel the next few years, and now they're just traveled out. No more traveling. Cost of living, that sort of thing. I thought this was fairly weak, and I wasn't surprised to see the share price down at all. Dropping, everything's just dropping. They're also talking about an increase in marketing So increasing marketing spend to 27% of revenue. That's not something you want to see, particularly when you're talking about percentage of revenue. So revenue down, well, GTV down, and revenue of 19.95 million, down from 24.27. So everything is down. They also cease operations in van sales. Not selling vans anymore. Commentary, this one, I can't remember the commentary, but I would assume it's fairly weak if they do have any commentary here. And here we go. Comments by Justin Hale. Talking about how it's been a challenging environment, no duh, to navigate with reduction in revenue and increased costs. They have a focus of profitability for the remainder of financial year 25. They will focus on improving EU markets, strengthen our position in Camplify markets, and a few other things they're going to do. And their outlook is... Yeah, so the outlook... Oh, they're talking about a seasonally stronger second half period. So hopefully they can turn things around this particular half year. But who knows what's going to happen during the rest of the year when it comes to travel. Maybe, yeah, people just traveled out. They don't need this sort of thing anymore. Anyway, so that's Camplify. And the main thing I just want to focus on here is a chart. And this is one of those companies where it's why. I do know this has been popular with that one Osbis the guy, or the guy. He's the Indian guy, I think, who has just talks about this company, has talked about this company a lot over the past year. And my question to him is why? Just by looking at this chart, I wouldn't call this company high quality at all. So I'd only maybe get excited about a chart like this if it was a high quality company and I expect it to remain high quality. A drop in share price like this could be exciting. But for a company like this, no, it's not exciting. It's actually, it's just because the share price just can keep on dropping. You just don't know how long the share price will remain in a downtrend. There would be a lot of people who got really excited, say back in May last year. Share price dropped 24.7% on that day. You can see this rally just after that. This really strong rally just after that. So there would have been some people who saw, oh, an opportunity here. No, it's not. And some people would have bought, say, at $1.50, and the share price has almost dropped 67% since then. So be very careful when you do see the share price drop a lot. So my rules is I don't mind buying in a company whose share price has dropped a lot if I think that's a high quality company. And that's a big if it's a high quality company. I've done this before with companies when I've seen that, particularly in America, for instance, Meta. When I saw the share price of that company drop on the back of what was thought as weak quality numbers, I just went, yeah, this is my opportunity to buy some Meta shares. Meta Platform. I'll just show you when I bought. There it is. So, yeah, share price on the 25th of April, so almost getting to 1 year ago. Oh, good day as well. Dropped 10.56% because of the quarter. Now, I do consider America to be a much more fickle market. You can see that with Meta. The quarter before, share price rallied 20%, then it dropped 10%. And then the next quarter, the share price rallied, I can't remember what it did, but the share price, yeah, it's just rallies, has kept on rallying. So this was an opportunity I found. I would consider this company to be high quality, and yeah, it was a good opportunity I found. Anyway, so with Camplify, no, for me this is we just don't know. It could drop another 67% in the next year. Don't know. And by the way, I think the share price must have plunged when they released the results last February. Just before that, the share price was 250. So the share price has dropped 50 over 250. So what's that, 1/5? So we're talking that share price has dropped 80% since February last year. 80%. That doesn't mean there's good value in this company. Camplify, coming in at number, what was it, 3? Oh, coming in number 2. Eagers Automotive. Yeah, this was an interesting one. If you have a look at the numbers without knowing any context, you'll go, whoa. That's not what I saw. I must have opened up. Oh yeah, I didn't have a look at the announcement or presentation. I must have only opened up the preliminary final report, it makes sense because the other two announcements were not price sensitive. So I only look at price sensitive announcement. This is going to take a while. So when you look at the underlying numbers, maybe even the statutory numbers, it looks pretty weak. So there's context, and the numbers did beat expectations. That's the first thing. So the numbers were better than expected. And the other thing I did read somewhere was the outlook from management is, so they're expecting some pretty good growth in the current financial year. So this is taking forever to open up. Thank you very much, ComSec. So if you just have a look at the underlying numbers here. So here we go. So revenue was up. Underlying EBITDA was up slightly, but underlying operating profit before tax down a fair bit, $60 million. Statutory profit down a fair bit, and statutory profit after tax down a fair bit as well. They don't have percentages here, but it was down. Underlying earnings per share, 91.9 cents. Last year was 112.4 cents. And fully franked dividend, 50 cents. Last year it was 70. Oh no, it was the same as last year, but then the previous year before that was 74 cents. So the main thing here was the numbers did beat expectations, so they were better than expected, and also the outlook was really good. Apparently the management is quite bullish, and this was of interest to me because the share price was in an uptrend. So we have a look at the chart right now for Eagers Automotive, and this was on my buy list. So yeah, it was in an uptrend. This was on my buy list because the share price or the chart was looking pretty good. And then Peter Warren and Autosports both released some negative trading updates. And I thought, oh, that might be similar for Eagers Automotive. So I won't trade this company because of those two companies. So if you just have a look at the charts of these two companies, now maybe they're completely different, but they're in the same space. So completely different chart. This is Peter Warren. No interest in that. And Autosports Group, yeah, fairly similar than Peter Warren. So you can see a massive difference in the charts of Eagers versus those other two companies. Anyway, so based off that, so I thought, oh no, I'm a little bit skeptical. Eagers would be releasing something positive, but the market was saying something different. The market was saying, hey, have a look at this company just based off what we're seeing in the chart. So the chart was actually looking pretty good. So this is probably an indication or maybe proof that listen to the market is probably a good idea. So the market will take you down the wrong path on occasion, but that's much rarer than taking you down the right path. And in this case, it would have taken me down the right path. Now, the share price has also got back up to the levels it was not that long ago. So I probably won't trade this, because I don't think this is sort of the company you own for the long term. You can see share price all over the place during the last 10 years. And yeah, I just don't think there's much value in this company at these prices. The other thing is they might have been really bullish in their outlook, but maybe they're being way too bullish. Maybe the conservative route would be the way to go. By the way, I can't remember where I read Eagers Automotive bullish, Automotive. Trying to remember when I read it. It could have been in Capital Brief. I'm just going to have a look. So there's Neuren, Ramsay, IDP Education. Eagers Automotive shares soar on record revenue. Well, I'm not sure it's soaring on record revenue. In fact, they mentioned here statutory profit down 25%. Underlying earnings rose 1%, while revenue was up 14%. That's underlying. Maintain the same dividend. Here we go. Oh, yeah. Okay, yeah. So this is very interesting as well. Keith Thornton, the CEO, said the company had performed better than the overall market. So Peter Warren and Autosports were sort of the market, and they performed pretty badly. So Eagers is performing better than the market, and that's actually quite interesting. With statutory results only down because of impairments. So I probably should have a closer look at that as well. Margins remain resilient amid strong new vehicle demand, which is interesting. There's strong new vehicle demand. I didn't think there would be. The group now expects increased revenue by $1 billion in 2025. So that's a nice little increase in revenue with demand supported by material order bank and positive industry dynamics. It also said there is an important opportunity for profit improvement through deeper integration of recent acquisitions. So get a totally different vibe from Eagers Automotive than I do get from Peter Warren and Autosport. So there is maybe an argument that Eagers is a much higher quality company than those other two, and this could be more proof or some proof that you should stick to the higher quality companies. I don't know if I'd call Eagers Automotive high quality company, but yeah. Share price is up 21%. And now on to the top stock of the day. It's Wiseway. Share price up 51.85% on the back of results. This is some sort of transport logistics company, I think. Something like that. Liquidity in this company has been weak. Now, the share price of this company was a bit of a market darling, maybe 3 or 4 years ago, but the lack of liquidity kept me away. Didn't really like what they do, not a lot of margins. And then they released the results last night, same with Motorcycle Holdings, by the way. And I saw these numbers and I went, woo. So Australia's leading integrated freight and logistics operators. There you go. So group revenue, 83.8 million. So this is not a small company in terms of revenue, but low margins. And we know those low margins because revenue 83.9 million, group EBITDA 6 million, profit 1.6 million. So it wouldn't take much for the profits to be completely evaporated. One little thing that can go wrong because of those really low margins, and that profit is no more. But profit, now that's net profit before tax, not after tax, but it did increase 182%. 4 successive half-year periods of positive profitability, and an interim dividend proposed 0.4 cents, cash and cash equivalents of 11.8 million. Now, upon this rise in share price, the markup of this company is 35.98 million. So share price, or the markup, would have been probably 22, 23 million. So it's a small company. And the other thing, so it is profitable. That's the main thing. It is profitable. And the other thing is, if you have a look at the chart for Wiseway, you'll notice there is a bit of a liquidity issue just by looking at the chart. So that's a weekly chart. But if you have a look at the daily chart, and if you go back to 2023, it wasn't many days of trading in this company. You can just tell by the chart. And you can tell in Trading View the distance between 2023 or the start of 2023 and the start of 2024 was fairly short, very narrow, which means there wasn't a lot of trading days. You can see in 2024, the amount of trading days has significantly increased. So liquidity has improved. And in fact, the share price has started to move upwards. Share price as low as 4 cents towards the end of 2023. Now, if we go back to the weekly chart, you'll notice, the share price was significantly higher than it was now. So in 2000, share price rallied up to 44 cents. So there could be still significant upside for Wiseway Group. Would I trade this? Probably not. Probably not. But this is the definition of a breakout. Wiseway Group. Okay, I have run out of time, unfortunately. So none of your questions or comments. If you have any questions or comments that I'll answer at a later time, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.